Now, please help me welcome Brian Penny, Chief Executive Officer, and Tania Barreto, Director of Investor Relations of Wallbridge Mining, for a fireside chat with Ben Pirie of Atrium Research.
Hello again. Thank you. All right, Brian, Tania, thank you for being here today, and everyone else in the audience. So Brian, we only have 15 minutes. Maybe you can kick off with a quick sort of high-level company overview, and then we can get into some specific questions about the assets after that.
Okay, well, thank you very much, and thanks to the team behind the event for organizing a great conference again this year. We appreciate the hard work, and we've been here for 4 years, and virtually certain we're coming back next year. So, a little bit about Wallbridge. Wallbridge is a explorer/developer that's been around for 25 years. We started off as a explorer in the Sudbury Basin, base metal assets in the Sudbury Basin. That went on for about 17 years, and then we acquired a position called Fenelon. It was about a 10.5 square kilometer property that we explored, and that was the initial discovery. We liked the area so much, we acquired a company called Balmoral Resources, which owned, most of the property we own today, subsequently disposed of the base metal assets. And we're really excited because we completed a PEA on Fenelon most recently. It was published on March 27th. The full tech report is on our website and filed under SEDAR and available. It focused on a smaller size operation than the last study, 3,000 tons a day, focusing on raising the cutoff grade to mine and process the highest margin tons. And looking forward on de-risking, the new study includes dry stack tailings. The new study focuses on paste backfill underground. At the end of the mine life, what little waste stockpile on surface winds up underground. It has a 16-year mine life. The annual production is 107,000 ounces of gold a year. In the first 5 years, it's 127,000 gold. And some of the summary economics at 2,200 gold, which was analyst consensus price when we went pens down on the pricing in February of 2,200 US. And it has a 21% IRR and NPV of $750 million. But at $3,000 gold, the NPV goes up to $1.4 billion, and the internal rate of return goes up to 34%. And the exciting thing, I'm a financial guy, I'm a CPA by trade, is payback at $2,200 gold is 4 years, payback at $3,000 gold is 2.5 years. So, nice mine life, attractive economics, which will help with project financing.
Well, great, and gold's already pushing well beyond 3,000. So Fenelon, great project, PEA recently announced. What are the next steps for Fenelon? I know you've got some studies ongoing. Maybe you can talk about that.
Yeah, an excellent question, and thank you. Fenelon, with the recent PEA, our next step is pre-feas. We believe that it's probably about 2 years to complete a pre-feas, but as we get into the details, we'll aggressively look at improving on those timelines. We have an infill drilling program that needs to be completed to upgrade the inferred to indicated and the indicated to measured. So that will be ongoing. The geo team led by Mark Peterson, and Mark is a great economic geologist. I worked with him for 11 years when I was at New Gold, and him and Mauro Basutti, who is a consultant that's working with us. He was the reserve and resource guy at New Gold, so they're working on that to determine how many meters of infill drilling we're going to need, what is the cost of that. And then I've hired a group out of Sudbury called Mayhew Performance. They worked on the recent studies on the Porcupine assets for Discovery Silver. And so they are going to look at all of the studies that we have and what needs to be completed by, to get us to pre-fees. And our goal is to have that in-house sometime this fall.
Right. Great. So pivoting over to your secondary asset, which is, if I'm correct, connected along the same property to Fenelon, but this is Martinier. It does have a resource on the project. Maybe you can talk about the status there, and I do understand you did have some news Monday afternoon that you want to talk about.
Yeah, no, thank you. Martinier is about 30 kilometers away from Fenelon. Fenelon and Martinier are on the same trend on the Ontario side of the border as Canada's largest gold mine, Detour Lake. So from Fenelon to Detour Lake, as the crow flies, is about 70 kilometers. Martinier is in between. Martinier has a resource that adds up to about 750,000 ounces. About half of it's indicated and half of it's inferred. We had some recent drill results there because right now, until we figure out what we need to do to get to a pre-fees, we're focusing on drilling. Most of our drilling budget this year is focused on Martinier. There are two phases, a phase 1 and a phase 2. Phase 1 is completed. Phase 2 will start in mid-July. We've released assays from 9 holes on phase 1. The news release went out Monday night, and spectacular grades. One of the intersections was 17 grams over 10 meters. We've had hits of 28 grams, 40 grams, 29 grams, 28 grams. So, very, very attractive. And, at the end of the day, we need to figure out a way on how we finance the pre-feasibility. And, that's our prime directive. And does Martinier come into play with this, looking for a partner or something like that? Yet to be determined.
Right, right. But so there's another about 2,500 meters worth of assays to come in this first phase, and then phase 2, based on the results from this phase 1 program, you'll determine what the plan is for that. But that's another roughly 7,500 meters of drilling.
What phase 1 is 7,500 meters. The whole year is 15 to 18,000 meters.
Right.
Of these 7,500 meters, about 6 holes remaining, and we will have those results out late June, early July. But it's following up on work that we did last year and some of the extensions that we had. And there was one hole that was drilled, nothing really exciting, but it was north of the Lac de Soil fault. And, nobody has ever drilled north of that fault. And it hit, 4 grams over 6 meters, including 7 grams over 3 meters. So kind of exciting as we piece this together. The difference between Fenelon and Martinier, Fenelon's been around and explored since the early 80s. Historically, there's about 500,000 meters of drilling on Fenelon, and Martinier is a little north of 150,000, so some catch-up work to do. Fenelon is in sediments, Martinier is in volcanic, so a little bit different metallurgy.
Right. Right, and again, it's nice to have two assets where, as you develop Fenelon and there's not too much news flow in between, you can fill it in with some drilling from Martinier. So let's talk about the team. What does the team look like right now? Maybe a little background on yourself.
Well, myself, my first senior role, I've been in this business for 40 years, so I could spend the last 6 minutes talking about what I did in my career, but that's in nobody's best interest. But my senior position was in 1993. I was the first CFO of Kinross from 93 to 2004. After I left Kinross, Randall Oliphant and myself got together. We took control of a junior called Western Goldfields. Western Goldfields owned the Mesquite mine in California. We financed it, got it into production, got off the bulletin board up to the TSX and onto the New York Stock Exchange ultimately. So we went through a process of upgrading it, increasing our audience, and then we merged it into New Gold, which I became the CFO of New Gold and ran with that for 11 years. I was ready to retire, and a good friend of mine who was on the board of Wallbridge at the time said, we need some help on the financial side, so I joined that with a goal of, spending 5 years or so and then further retiring. But 2 years ago, the Mars Cord, the previous CEO, retired, and I was asked if I wanted to run with that, and I said sure. So, seen a lot of projects, built projects. Western Goldfields was a screaming success, and looking forward to unlocking value for our shareholders for Wallbridge going forward.
Absolutely. And then with that, so I know we talked about, the work that you're doing over the next 6 months or so. What is the cash balance, sort of balance sheet of the company right now? How far does that cash get you? A big question people like to ask is, do you need to raise money in the next 2-3 months?
We closed the first quarter with $16 million in the bank. We filed our tax returns early to claim our Quebec refundable tax credits. The claim was for $4.8 million, so we're expecting to receive that, at the latest sometime this fall, but hopefully a little bit sooner. And that gives enough money to take us into the first quarter of next year.
Great. And I imagine, depending on what gold continues to do, the stock price does start to wake up here. Might pull that trigger sooner rather than later, but nonetheless, what about the shareholder base? What does that look like right now?
Well, we have 3 large shareholders. Agnico Eagle, who has been a supporter for us over the years. Kirkland Lake did the first equity investment in Wallbridge. Subsequent to that, Agnico has participated pro rata to hold their interest at 9.9%. Eric Sprott owns about 15% of the shares through his numbered company, and William Day Construction, a contracting firm out of Sudbury, owns about 5%, and they've been longtime shareholders. They actually invested when the primary focus of New Gold was base metal exploration in the Sudbury Basin.
Great. And that did remind me, I'm not sure why, but Fenelon and Martinier, maybe you can talk about the infrastructure just quickly, the location. Obviously, there could be some upside to the PEA based on possible power. Maybe you can talk about that.
Yeah, there is a road to the exploration site. It's a gravel road which is upgraded as part of this study. We upgraded the bridge last year because it was a little tired. So that infrastructure is in place. The Quebec power line, James Bay power line, runs about 27 kilometers south of the property. And so we have included in the study a power line to seek electrification. We've had on and off discussions with Hydro-Quebec in the past about the potential for electrification. So we're building the relationship, and the decision will be made once we have a feasibility study done at some point in future. But the current plan is based on LHD underground equipment. The prize here is the current rate that industrial customers pay is about 5.5 cents per kilowatt hour. And, with that successfully in hand, we would, really focus on electrifying as much of the underground fleet as possible. Helps with ventilation, it helps with, health and safety, everything. Right. It's the right thing to do.
Absolutely. So we're coming close to time, and I will get you involved in a second, Tania, but I do like to summarize quickly with what investors can look out for over the next 6 months or so in terms of catalysts.
Well, the catalysts are the ongoing results from the exploration program at Martinier. As I mentioned, phase 1, we should have the assays out late June, early July. Phase 2 starts July 15th. We will have a couple of news releases between now and when we shut down the operations in November sometime. The operations actually shut down in October, but it'll take us a little while for the assay turnaround. We'll have some news flow when we collect the refundable tax credits, because that's pretty important. And, put ourselves in a position to announce what our next steps are as we talk about our plans for next year.
Right, right. Tania, so just to finish off quickly, I know there might be some people that haven't had a chance to speak with the two of you in a one-on-one. How can people get a hold of you? Are you attending any other conferences? Tell us a bit about that.
Sure, yeah. So we're just wrapping up a pretty robust spring marketing and conference season, but we'll be at one-to-one in New York next week. We're based in Toronto, so we're always happy to take meetings locally or virtually, and contact information's on the website. So happy to fill or answer any questions or fill in any gaps with anyone.
Awesome. Thank the two of you.
Thank you.
Thank you.